Hi, welcome to my next episode of War in the Markets. Today is also the 30th of March, the last working day of the financial year. It also happens to be the 1 month anniversary of the war. So, let me use this opportunity to summarize for you what happened today as well as what's happened over a month since the war happened. Well, not that the news is very good, like today was another 500-point fall in the Nifty, massive correction. What triggered this fall was obviously the oil continuing to remain high. FIIs had a heavy selling day today. While the DIs matched the FIIs selling, the net result was that either they bought after the prices fell, DIS, or I think the other answer is that not only the cash selling by the FIIs, it's also the shorts. If I look at the Nifty put call ratio, it's at 18 to 82. It's been the worst since the war began. And what else? Of course, if you look at the Nifty futures, they're heavily short on that. And the reason for that is clearly, while there was not a major movement in the oil price today, the fact that huge amount of 50,000 ground troops are being moved on the ships around the Gulf by the US, preparing for a major ground invasion. At the same time, he keeps putting out positive tweets that he's talking to some moderates in Iran and he expects the war to close. So the market really is not paying much attention to the tweets and just looking at the fact that continued closure of the Hormuz Strait is going to be hurtful for not only the Indian economy but overall emerging economy. So the story around the strengthening of the dollar index continued to be at 100 in addition to the oil, but on Friday, if you reckon, the rupee had weakened tremendously. The RBI took certain steps by limiting the net open positions of the banks to keep them from taking a punt on the rupee, and so that brought down the beginning of the market. It brought down the currency, but by the end, the currency again cupped up close to $95. So, what do we read into all of this? Well, first of all, is that the fact that the volatility in the market continues to be very high. The VIX is almost at 28 levels. So clearly, short-term traders looking to both make profits by shorting as well as long-term people trying to hedge their positions are dominating and expect a volatile week ahead. Thanks.